Most people think property auctions are risky. They imagine fast bidding, investors taking huge gambles, and properties nobody else wants. But the reality is very different. Some of the very best property deals in the UK happen at auction. And if you understand how the system works, then you'll do very well. In this podcast, we're going to break down how property auctions really work and why more investors are turning to auctions to find opportunities. So, welcome to the Property Auctions Podcast. I'm Dominic Farrell, and I'm the author of the UK's best-selling book on property auctions, which in 2026 is now in its fourth edition. In this podcast, we'll explore how the auction market really works, how investors find deals, and the common mistakes buyers make when approaching auctions. We'll also be looking in general at UK property investment, economics, legislation, and anything which impacts investors in UK real estate. So whether you're completely new to property auctions or property investment, or already investing in property, the aim of this podcast is to help you understand the opportunities and avoid the mistakes. So, like many investors, I didn't start in property auctions straight away. I am from Liverpool, which you can probably tell by the accent, and I was fortunate enough to be sponsored by the army to go to university where I read economics. And from there, I went to the Royal Military Academy, Sandhurst, and trained to be an infantry officer. And then after a career in the army, where I actually bought buy-to-let properties, I retired and went into property full-time. And that was back in 2004. So I've been doing this quite some time. And then very quickly, I became a property developer in the Republic of Cyprus. And like everyone else, at the time when we were credit crunched in 2008, it all went wrong. The buyers walked away, the banks walked away. But there are always opportunities. And this is really what marks people out. It's how you deal with adversity. And so it was quite clear that there was going to be an opportunity in distressed assets. And if you read my book, that's where it starts. It starts in 2008, 2009. And there are many opportunities. And I think there's going to be lots of opportunities now in 2026, 27, 28, because of certain economic and political factors. So what you have at auction is you have something called distressed assets. Now, what does that really mean? A lot of people, particularly in the UK, think that means a rundown property which requires renovation. It doesn't. The distressed means that the seller wants to realize cash quickly. And that can be for a number of reasons. Some people are just after a quick sale. We know with private treaty sales, i.e. estate agents, Rightmove and Zoopla, they can go on for months and there's no guarantee that the sale will go through. There's lots of reasons why it won't go through. So people requiring quick cash want to sell properties quickly. And if you go to an unconditional auction, generally, you will get your property sold within 28 days. If you take into the marketing period, maybe an extra 3 weeks, but you're going to get your cash a lot quicker than a private treaty. And because there are so many inexperienced people bidding at auction, you may well get above market value. I know that sounds pretty ridiculous, but I see it every single week. And, one of the reasons I've written the book and one of the reasons I'm starting this podcast is to try and educate people that you really do need to do your due diligence and know what you're doing at auction, because I've seen people lose tens, if not much bigger, sums of money at auction. What's a problem property? That could be a property that has some sort of legal issue. It could be a title issue, it could be a boundary issue, it could be anything. A problem property could have subsidence, it could have disputes with tenants. There's a whole range of issues. However, the opportunity is in how you solve the problem. And that's one of the tricks with auctions, is to look for problem properties where you can solve the problem and the uplift is substantial. And I'll be talking over the next few episodes of these type of properties that we've purchased in the past and explain what the problems have been and how we've resolved them. Properties at auction could also be repossessions. I think we're going to see a few more of those, sadly, but I'm afraid that's the way it works. Generally, people are not involved. It's simply the real estate. The people have long gone, months, if not years earlier. And this really is about the banks trying to recoup some of their loans. There may well be probate properties that they're quite frequently in auction, and also developers selling stock. I think there are problems with some off-plan developers, particularly when investors walk away, particularly when interest rates rise, and some of them need to go to auction to sell stock. So really, auctions are often when a seller wants certainty and speed. Not every property at auction is a dud. I can reassure you of that. And again, just a cursory look through my book over the years, we'll see many, many opportunities. So the big myths then about property auctions is only rundown properties go to auction, or auctions are only for professional investors. Everything sells cheap. So I've sort of answered those misconceptions. Everything doesn't sell cheap because you get people who don't know what they're doing bidding up the price. Auctions are not just for professionals like me. They are for people who understand them, people who learn about them, people who successfully take all that learning and create some action. I've got lots of examples of people who have done that. So how does it work? How does an auction work? Well, basically, an auction house produces a catalog. In the old days, it would be a physical catalog, but since COVID, an awful lot of auctions have gone online, not just the catalogs, but also the bidding. To be honest, I prefer it. I went down to an auction in London just this Tuesday with a group of people I work with. And it's the first live auction, in-person live auction I've been to since COVID, because all the auction houses I deal with are all online now. And I think we were all taken aback with how few people were in the room. There was no energy in the room. I wanted to take this group of people I work with there to show them crowd psychology and how people get carried away. And it was almost like going into a funeral parlor. But the auction house was doing very, very well because everyone was online. People putting proxy bids in and telephone bids and everything else. So the in-person auction, I don't think, will come back because of the success of the online auction. So the auction houses create a catalog, and you can search this catalog according to whatever strategy you have. Strategy is very important. You need to be able to narrow down properties according to the type which will fulfill your goals. Now, people talk about strategy and goals all the time. You can't sort of get away from it. But the reality is, you know what you want to achieve. If you want to achieve, I don't know, being able to fund school fees, care home fees, a second income, a retirement income, you want to control your own time, therefore give up work, then you are probably looking for an income strategy, and that will guide you towards the type of properties you want to buy. You may decide you want to flip properties, trade properties, develop properties, create HMOs. There's a whole range of things you can do. And the best way of fulfilling that is by buying at auction. So auction houses set a guide price. And generally that is to entice you into the lot. There are generally competitive guide prices. And you'll find if a lot isn't particularly popular, there haven't been many viewings or many legal packs downloaded, the guide prices will reduce. But the guide price is not what you will pay. There is a reserve price, which is above the guide price, generally 10%, but I've seen them higher. But generally, reserve prices should be about 10% above the guide price. And the reserve price is what the seller has agreed to sell the property for. The bidding process, again, is pretty straightforward. You have to register with the auction house and you have to go through money laundering checks, which involves providing ID, proof of funds, and some sort of ID to do with your address. You have to remember that a big part of the auction process is the legal pack. And another thing to remember is you have to view the property. So they're the two factors, in my view, you have to do. You have to read the legal pack, and if you are then going to bid, you have to get a solicitor to look through the legal pack on your behalf and report back formally. And you have to go and view the property. Now, if, for instance, you can't, so I've got clients overseas, so I go and view them for them, but you have to ensure that whoever is doing the viewing on your behalf knows exactly what they're doing. Don't buy a property at auction without either reading the legal pack and then getting a lawyer to look at the legal pack and viewing the property. So the special conditions of sale, which are contained in the legal pack, will tell you how long you have to complete. The norm is 28 days. So on the successful winning of the bid, then with a unconditional auction, you exchange contracts and completion is usually 28 days later. If it is a conditional auction, and I'll explain these terms in future podcasts, but if it's a conditional auction, you have an option to purchase within 56 days. So the conditional auction, you may know as the modern methods of auction. So it is very different from the unconditional auction. And in a future podcast, I'll go through the differences, the pros and cons, and why maybe one type of auction is better than another. So we've already looked at why sellers sell. And really, this is another big factor about property auctions. There's a lot of psychology involved. So what I say to people, and again, it's in my book, you have to be a bit of a Sherlock Holmes right at the start. You need to work out why a property is at auction. Because when you understand why it's at auction, then you can understand the psychology of the seller. So if, for instance, it's a receiver on behalf of a mortgage company, they will be guided by the amount of money required to pay off the loan with costs. And I've always found in the past with those type of sellers, particularly when the property doesn't sell, is they're quite reasonable on the price, because once they've achieved their price, there's no emotion involved. It's just a spreadsheet number. But, then you may be dealing with a couple who may have lived in a property for, 20, 30 years and are moving on, but they want the cash quickly, who have an unrealistic idea of what the property is worth at auction. So you do really need to understand why some people are selling. What we still have now, even all these years later, is we have COVID-driven sales. In fact, we just recently bought one where the sellers are located overseas, and during COVID in their respective countries, they didn't have the provisions that we had during COVID, where the government of the day borrowed lots of money to give payments to people. I think they call them furlough payments. Overseas, a lot of people had to use their savings. As a consequence, became distressed sellers. They needed to sell property in order to replenish their savings. So this really is just an introduction about the property auctions podcast. As I've said, the aim over the forthcoming episodes is to explore topics like auction legal packs, how to find deals, and some of the biggest mistakes buyers make when bidding at auction. I've seen some horrendous mistakes recently. In fact, on my YouTube channel, if you go to youtube.com/distressed assets, you'll see some videos. I did one before Christmas of 2025. There was a property that I took quite a few people to go and look at to show them why you shouldn't buy this property. And then in the same breath, I said, someone will buy it, and highly likely they'll buy it above market value. And lo and behold, they did. The property had huge legal issues, and it also needed renovation. And they'd have been better off going to Rightmove and saving themselves tens of thousands of pounds. So this is property auctions is something you really need to understand what you're doing. It's a very, very unforgiving business if you go in not really understanding it. One of the worst mistakes you can make is not to read the legal pack and not to view the property. It's catastrophic. So over the next few episodes, we'll go through all the key things that you need to understand. We'll also be developing a wider remit on this podcast as well. We'll be looking at the UK economy and how it affects real estate markets. Legislation, obviously we've got the Renters' Rights Act 2025 coming in on the 1st of May 2026. And I also have a lettings and property management company. So we are very, very busy getting ready for that. We'll explore how that impacts UK real estate, particularly property auctions. We have a lot of landlords currently selling. We've seen some exceptional opportunities recently, not just at auction, but off market, distressed sellers off market who want quick deals simply because they want to get out. Also, what I'm going to develop is sort of listeners' questions. So start right now. If you've got any questions you want me to answer or any deals to look at, I will select some as we go along. My email address is dominic@distressedassets.co.uk. The website is distressedassets.co.uk. And also, if you wish to explore property auctions in more detail, my new edition of the book, Property Auctions, Repossessions, Bankruptcies and Bargain Properties, is available on Amazon. And I will see you at the next episode. Thank you for listening. Really appreciate it. If you've got any queries, just drop me a line. Bye now.